I never know when to start, so here we go. Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about home builder sentiment as it is collapsing right now. Mortgage rates are skyrocketing. Things are looking bad. It's weird, right? But we're going to start with a few stories before we get into the headline that's making headlines right now on CNBC about home builder sentiment. All right. First one's out of CNN, and this is a story back from May. I'm just going to gloss over it, but it's very, very important. U.S. home prices fall the most by in 11 years, but sales are down. That is exactly what happened 2005, 2006. Sales collapsed because rates went sky high and the home prices had already gotten expensive. So then everything got expensive, right? And we went to nothing. Velocity collapsed. But this is what's very important. Back in the spring, we were seeing stories like this where home prices fell the most in 11 years. And then that sort of went away. It said right here in April, sales of existing homes, which include single family townhomes, condominiums, and co-ops dropped by 3.4% in March. Annually, sales were down 23% from a year ago, right? Now, we have a lot of people that have come on and taken these victory laps because they don't know literally the real estate market from a hole in the ground. I'm not joking. They are not real estate investors. They were not real estate investors. They may own one house and a rental. That means nothing. Butt kiss. But they're out running around taking a victory lap because the annual numbers just came out and it showed that there was a slight increase, a slight uptick in the summer. That's actually seasonally normal. But you have to remember on historically low volume, right? We've never seen something like this. This is even bigger than what the run up to 2008. And so people need to get ready for this. Now, let me ask you this honestly. Do you feel like you did not get a fair shot at the last crash and correction? How many people bought homes or rental properties in 2010 to 2012? Essentially right in the bottom, right? 2011 was that sweet spot right there where prices were low, mortgage rates were low at the time. They obviously went historically lower during COVID, but how many people took advantage of it? Well, let me ask you this. How many of you wanted to take advantage of it? Or if you had the opportunity, because at that time you may have lost your job or your credit was shot because there was problems leading into the Great Recession, and you didn't get that opportunity. Well, there are so many people that felt completely robbed. Did you feel robbed from that event? The only thing separating you from somebody that took advantage of it and you that didn't get to take advantage of it is that they were prepared and they were taking action. And you have to literally start taking action right now. You have to start educating yourself right now on these cycles so that you buy or sell with conviction. And you have to have that knowledge to be able to give you the confidence to do some pretty crazy things. Because quite frankly, nobody got rich by playing it easy. And you have to understand that. And this is going to come. You are literally going to be like a financial firefighter running into a burning building of assets as they're collapsing in price. And those people running out screaming are going to be laughing at you, mocking you the entire way, saying, you know what, you're nuts. When you'll be laughing all the way to the bank as rates drop and you are buying these properties for pennies on the dollar. I really do mean that. I'm talking haircuts of 50%. And here, and to prove that, check this out. I've told you this before, that Europe is going to fall before America. And that is because Europe is ahead of the game right now in their crash. And I'm going to take you to, I'm right now in London. And this is a story. Actually, I'm going to show you this. Just a quick Google search, right? Of, when will houses drop? And it comes up out of a story out of the UK. It says the Office for Budget Responsibility has projected that prices will fall between 9% or by 9% between the years 2022 and 2024, before starting to rise again throughout 2025. Now, let me explain that. Okay, this is out of the UK. Think about this. Government numbers are already saying that they expect real estate to fall almost 10% for the years 2022, 2024. They've already seen prices start to fall. In some locations, you've seen them rise barely, but they're pretty much pausing in their price because nobody has the money to afford these things. They are still raising rates like the Federal Reserve is, but they are ahead of the game. How many people think that the government numbers are complete crap? Type crap in the bottom if you think that the government numbers are pretty complete crap. Yet the UK government is out there saying, we expect house prices to fall by 10%. It's funny. anytime the government comes out and says something that you have that has built up wealth in your mind is going to drop, it's actually going to drop a lot more. But the point is that the government can come out and say, oh, we warned you. If it drops 20%, 30%, 40%, they can still say, hey, we warned you. Yeah, sure, it wasn't as bad. It wasn't as bad as our numbers weren't as bad as what they really were. But hey, we warned you, and you should have done something about it. And you're never going to turn around and blame the government because, I mean, honestly, how many people in 2008 did you know lost their homes, but they weren't talking about it while they were losing it? It was just one day you figured it out. Oh, Bill and Sally actually they moved. Why they move? Well, they don't. It's awkward. Don't ask them. Nobody sits there and rails against the government and their crazy monetary policies while they're fat, dumb, and happy and they're going to their sporting event, right? And they only rail against the government when not only they lost their job, because if they lose their job, they're not going to sit there and rail against the government. But if they found out everyone else did, okay, then they're going to rise up. And right now, you've got a government saying, hey, you're going to lose value in your home. But that's because of rates. And when they say that they're going to normalize and then go up, right here it says they expect the prices to fall in those years. But in, let's see, what is it? 2025, they're expected to rise again. Well, why is that? Because by 2025, rates are going to start dropping. As a matter of fact, you're going to see rates dropping, interest rates in 2024. And I know that sounds crazy because people have just seen rate up, but eventually something's going to break. And we're seeing the banking sector in Europe and in the US breaking right now. We are seeing all kinds of activity and deflation, like starting to have these drops, right? But they still haven't got on top of that pesky, what is it? The food and energy. And that's what the central banks really care about. Now check this out. This is out of Forbes. Housing market predictions for 2023. When will home prices be affordable again? It says right here, through the national average 30-year fixed mortgage rate edged near 7%. Well, we went over this, and then we're going to get to the CNBC article. This is just a couple weeks ago, or a couple days ago. The second week of August, rising to 6.96% the week ending August 10th. Literally only a week ago. The median existing home price also broke through 400 for the first time in 2023, hitting 410, the second highest price ever recorded, and now is poised to surpass in June of 2022, all-time high of 413. Let me explain something that most people do not understand. And this is why you have to take action now, and you have to learn the most basic fundamentals. I teach this stuff in my course, but I also teach more advanced stuff. Think about this. If all home prices stopped today, sales stopped, not one sale until tomorrow, and some fool went and got a 40-year mortgage, tied themselves to a 40-year mortgage because they were panicking because they allowed a real estate agent to convince them that if they don't buy now, they're never going to be able to buy. And they're probably being convinced by a real estate agent that probably doesn't even own their own home. Isn't that crazy? You don't even have to have like any kind of experience investing in real estate to sell real estate. You don't have to have any experience in real estate, owning companies or anything like that to give a loan, right? You just go and get a license. Government just goes, you're good to go. There's no background in most agents that actually they could go off of experience and go, you know what? I'm going to be honest with you. You may not want that house right there with this configuration because you're going to have a problem down the road renting it to this type of person or this type of family, or there could be city ordinances. All they care about is like, do you want it? Do you want it? Is the paint's good? Okay, cool. Let's buy it, because all they care about is that commission. They have literally by and large, like 80% of the realtor population are fly-by-night realtors. And okay, please put down in the comment section all the realtors that understand what I'm talking about, because how many realtors, honestly, were even realtors prior to the Great Recession starting in 2005? And if you have, put down there in the comments that you have, because I want to see how many of you are. But honestly, there's a big difference. My background is from investing. Then I became a real estate agent because I owned a brokerage that we were in a $35 million deal, and it was going south because it was a big pension fund, and all of the licensed people couldn't negotiate the right deal. So I had to go and challenge the realtor's license to go and get it so I can break into this escrow. It was a 9-month escrow. And so that's my background. I've owned a couple of brokerages. Yeah, I was a real estate agent, but I was a horrible real estate agent. Why? Because I know about these cycles. I'm like, oh crap, we're coming into the top of the cycle. I don't want to sell anybody real estate. I don't want to look them in the face when they're losing their home because they lost their job. And then they find out I knew about it. I knew about this cycle. So all I got to do is go back in the internet and see what I've been talking about. So this was this last year. So if one home sold, if one person sold their home to some fool that dove in with a 40-year mortgage, and let's say they paid for the median home price $450,000, that would bring the entire price up. And that's what so few people understand. Now, this is the story that I wanted to get to. And this is what I think is so very valuable. It's out of CNBC. It just happened. Home builder sentiment drops sharply as mortgage rates surge over 7%. It says builder sentiment dropped 6 points to 50 in August, according to the National Association of Home Builders. Wells Fargo Housing Market Index, anything over 50 is considered positive. All right, so we are at neutral right now. Think about that. Anything over 50 is positive. So 51 is positive. We're pretty much neutral or negative, whichever way you want to say. Put it down in the comment section below. Do you think we're neutral or do you think we're negative right now? I believe we're negative. Mortgage rates are now holding solidly over 7%, hitting 7.24% Monday, according to Mortgage News Daily. The share of builders cutting prices rose to 25% in August from 22% in July. You know what's interesting? A lot of people have brought up Warren Buffett throughout this entire thing. And it's funny, you can nail it a few times and all of a sudden people think you're going to be brilliant the rest of your life. Now, Warren Buffett, we just found out through quarterly results or documents filed that Berkshire Hathaway picked up a lot of home builders in the spring. I wonder what they're thinking about that now. It says right here, rising mortgage rates and high construction costs stemming from a dearth of construction workers, a lack of buildable lots, and ongoing shortages of distribution transformers put a chill on builder sentiment in August, said Alicia Huey, NAHB chair and home builder and developer from Birmingham, Alabama. Mortgage rates are now over 7%, hitting 7.25%. The average rate on a 30-year fixed loan rose over 7% the last week of July. Of the index's three components, current sales conditions fell 5 points to 57, and sales expectations in the next 6 months fell 4 points to 55. Buyer traffic dropped 6 points to 34. Look, the Federal Reserve has been saying over and over again, we're going to keep raising rates. And yet the street and the public seem to not believe it. Jerome Powell came out about a year and a half ago and said, you're about to experience pain. And I explained exactly what that pain was. So the point being is this. I asked at the beginning of the video, and I want to ask again, are you ready to take action? Because if you're ready, you need the knowledge, the understanding, and the know-how to do it. And I think there's never been a better time to bury your nose in the books, learn about real estate cycles, and start preparing now, because you're going to miss this boat. If you don't have that credit score set up, you don't have enough money in the bank, you don't have all these ducks in a row to where when you walk in and you're looking at that foreclosure list, you're able to pick whichever property or all the properties because you were prepared and not scared. Look, I'm gonna put some other discount links, 80% off the course for $199. There's, I think, 31 lessons now. We've got a couple more coming out. And as I keep adding, I'm not joking, I think that course will end up being 50 lessons when it's all said and done, because there's so much information to get you ready, but you can't do it unless you take action right now. I hope you have a great day. I thank you so much for all of the people that are supporting me. You are great. I would not be here if it wasn't for you. And I can't wait to watch you absolutely crush it and dominate this next real estate crash. When all of your family and friends think you're nuts, you're going to have the last laugh. The Economic Ninja is out.